Finally, we've got a market that's confusing the heck out of the bears. We just nailed down an A straight up day for the Dow, gained 125 points. S&P advanced 0.16%. Even the NASDAQ, okay, it dipped 0.03%. And this string's confounding a lot of people who don't understand that what certain public figures say is not necessarily what they mean. It's as though the whole thing's choreographed like a Netflix series. It's probably rated number 8 on the new release page. Although as exciting as this market strength is to me, I admit it's no Baby Reindeer or Man in Full. Oh, actually, the latter's not so good. So maybe our drama, it's a better watch. Let me go directly to the game plan so you know exactly why I say it's a Netflix drama, because I really got to get you involved with what's in my head right now, because I'm really kind of tired of hearing things and not being able to interpret them to you. For instance, on Monday, Loretta Mester, the president of the Cleveland Fed, speaks at 9 a.m. It'll be well covered, of course. She's both a hawk and a bear. Been one forever. Her talk with Philip Jefferson, the level-headed vice chairman of the Fed's Board of Governors, will give Mester a chance to articulate the most negative view imaginable. I predict it'll cause a sell-off because there isn't much else happening here, and you'll hear endless commentary and news clips about how the Fed's never going to cut rates. She's preternaturally negative. I wouldn't be surprised if she talked about the need to raise rates. That kind of chatter causes people to dump stocks and sends bond yields higher. I know it makes it so that everything's very unsteady, and that in turn keeps people off base. Not unlike what Neel Kashkari, the Minneapolis Fed president, who's bearish today and made people feel gloomier and more circumspect, did. I mean, this is the game. Or this is the drama, I should say. See, the sellers are allegedly fretting about the Fed's so-called timeline. Whether there'll be one cut, no cut, two cut. These Fed heads make you feel like we are never going to cut rates. So the audience, each time, is stunned. But the real story is that the loudmouth Fed officials make everyone confused, cautious, worried, and at times just plain scared, which by itself causes the economy to slow down. That's the goal. See, the slowdown then becomes self-fulfilling, causing a rollback in prices everywhere. Hey, maybe from Home Depot, which reports next week, to McDonald's, where we're hearing about a talk about a fabulous, cheaper rollback hamburger. See, the more these Fed officials entertain us with their hawkish commentary, as long as they keep us on the edge of their seats, well, the more likely it is that the Fed can cut rates in the not-too-distant future. The twist of the drama is that the more we hear from these hawkish officials, the worse the economy gets. And eventually we all win because the Fed needs a soft economy before it can cut.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.